See, there is a timeline. Is it right? There will be a timeline. Timeline is there. See, till now we have done, you have used draft financial statements. Is it right? Till now what we have done? We are talking about draft financial statements. Okay? That is what we have taken into consideration. Is it right? Draft financial statements. Till now we have covered only, is right now. What happens after this? There will be what? Dates are important. Is it? 31st December. Is it right? 31st December, then you will have the audit report. Auditors will sign. Is it right? Then financial statements will released. Is it right? Now, in between, is it after 31st December, is it audit will go on? Is it audit will be go on till 30th April? Is it right? Till 30th April. Now, if you come across any situation, any instances where you want to make some corrections, is it right? Then we have to make sure that how it is important. Most importantly, we have to make sure that if that amount is material. Material means, again, we cannot say on our own. Is it right? We cannot decide on our own that it is material or it is not material. It all depends on the percentage. Okay? Percentage, performance materiality. We have done this. Is it? Performance materiality. We have done with respect to profit before tax, with respect to sales. Is it right? That has to be done. Now, before you do any corrections, any modifications, I can say modifications, no corrections, modifications. Before you are doing any modifications, is it right? What happens? We have to discuss with the management. You have to write these steps are there. Is it right? We should not. First you identify, then you say that how best you can gather the evidence. Once you are gathering the evidence, we have to discuss with the management. When we discuss with the management, next, any modifications have been done. When modifications has been done, you have to take the written representation from the management. Once you have done written representation from the management, it has to be disclosed in the notes. The sequence has to be followed. That we will do in detail. Next one, second one, it is a going concern. 99% they will give one question on this. 99% going concern. What is a going concern? We should know whether there will be appropriate cash inflows will be there in future. A very simple understanding about going concern. Is that are we breaching any contract terms and conditions? Are we having a supporting evidence that the company will go further? Maybe you have applied for loan. The loan will not be granted. Big question mark. Maybe you have given the sales. Client, I am talking about the client, okay? Client has given the sales, discounts, recoveries are not there. Receivables turnover is increasing, it's a question mark. Bad debts are increasing, it's a question mark. Isn't it? Those things are very important. If there is any question mark on the future cash inflows, then it is a point of going concern. Third one, we have done extensively written representation. It is the part of the system as such. We cannot, whatever it is there, we have to take the written representation into consideration. We have to take it in writing, as simple as that, irrespective of X, Y, Z. Fine? Now, the last one is we are talking about the overall review of financial statement. Overall, overall means that it's on a broader terms. Is it right? We will cover these 4 points. Now, what we are doing, what is the purpose of subsequent review items? Is that how we are going to work it out with the subsequent reviews? what are the responsibilities of the auditors regarding subsequent events. What auditor has to do, that's very, very crucial. And when we are talking about the subsequent events, is it? There's definitely, I told you, there is a procedures. We should not say that yes. First you should identify, assess the event, you gather the evidence, discuss with the management. If management agrees, fine. See, when you are assessing, how is the materiality? If the materiality is beyond its limit, definitely we need to adjust it. Is that whenever we are adjusting the events, it has to be in writing. Is it? That is the point where we are talking about written representation. They will ask you this. Take my word. Now, what we are saying, define and discuss the significance concept. What is the going concern? I told you, going concern concept is nothing but we have done in financial accounting. Is that? We have done in financial accounting. What happens whenever you as an auditor doing the audit, fine, you are not only talking in terms of past year, is it right? You are not talking in terms of the current year, but also make it a point that we are very much focused about whether in future the company will be in a position to run. The auditor has to give assurance that the firm will be a going concern. Is that? You should be assured that yes, the firm, if any ups and downs are there, definitely it's a big question mark on the going concern. We will cover this, a major part of this lecture. What is the importance of going concern? Get your mind? We are talking about the importance. We are talking about the responsibilities of the auditors and management. What is the responsibility of the auditors and what is the responsibility of management? What are the indicators? Why we are having a doubt? Why? What are the indicators that the entity is not a going concern? We are not talking about positively here. Keep it in mind. We always talk about negative. Discuss the procedures to be applied in the going concern, what we have to do, what are the disclosures we have to mention, and what are the implications. If you take into consideration the entire factors, is that the entire factor is going to be worked out on what? On the going concern. Is it? That's the second one. Okay. Now, what they are talking about the third one? We are talking about the written representations. It's very simple. It's very easy. It's not difficult as such. Is it? Only thing is you have what is the purpose, and discuss the quality and reliability. See, we have done somewhere in lecture 6 that evidence, if it is oral evidence, it's less reliable. If it is written evidence, it is more reliable. If the written evidence is from the internal sources, it is less reliable. If the evidence is from the external sources, it is more reliable. In the same way, when we are talking about any modifications to be done to the financial statements, to the material misstatements, those material misstatements, we have to take the things in writing. Discuss the circumstances where written representations are necessary, and matters which representations are commonly obtained. Is that? It's very simple. See, I am telling you, when it's simple, it's simple. It's not difficult at all. Okay? Only focus how we are going to work it out. The fourth one, what is the overall view of the evidence? Is the overall review of the evidence about the financial statements. Is that we have to make sure that things are working as per requirements or not. Describe the procedure an auditor should perform in terms of overall review. And in the end, what we are doing, they are talking in terms of what? They are saying that it is reasonable assurance. Is that? We are talking about in terms of reasonable assurance. in terms of positive assurance. Is it right? In terms of negative assurance. Is it? In terms of positive, in terms of negative assurance. Is it? We have to make sure, if they say it is a reasonable assurance, we'll say that it is true and fair. This word is a million dollar word. Is that the entire thing is based on this? It's a true and fair overall view, because it reflects what? It reflects the entire financial statements. Is it? It reflects the entire financial statements. That's all. As simple as that. Is it? Explain the significance of if there is some uncorrected misstatements are there. Sometimes management don't agree. Is it? It's not that there is no precondition that management has to agree. Sometimes it will not agree. Sometimes they say they will not correct. Then what is the procedure we have to follow? And last but not the least, the effect of dealing with, how we are going to deal with the uncorrected misstatements. Is it right? This is the 4 different segments where we have divided this. Again, I am saying this. The first is subsequent events. The second one is going concern. The third one is written representations. And the fourth one is overall review of the financial statements. Is it? What it says, the rules, this is where we have divided this chapter. You have the first we are talking about the subsequent events. The second we are talking about the going concern. The third we are talking in terms of written representation. And the fourth we are talking in terms of what? Overall review of the financial statement. Now you see the things. Now we can make it a show where we have started. Is that where we are? Is that where we have this? See, if you understand this, you will understand the entire subject as such. Is that if you understand, we have done understanding the entity, assessing the risk, test of controls, deficiencies, substantive procedures, and we are where we are. We are talking in terms of our overall review. Is that? We are focusing on this. Now, what is the subsequent events? Are you clear about this? Is it clear to all what we are going to discuss? That's very important. What we are going to follow it up, that is very important. Okay? Now, what is subsequent events? Understand the concept. Application is very easy. Without theory, application is very difficult. Okay? Subsequent events are the events from the date of financial statements. Is it right? From the date of financial statements to the date of auditor's report. That become known to the auditor after the auditor's report. Is it right? See, from the date of financial statements and the date of auditor's report. Is it right? And facts that become known to the auditor after the date of auditor's report. I will go to one of the slide, here it is. See. Is it right? You see, this is what subsequent events are. We are talking, we say it's a year end. Here what we are doing, I cannot write. Here what we are doing, we are talking in the, till now what we have said, it is a draft financial statements. It is a year end. The audit work will start here. The auditor will sign here. Is that auditor's reports issued? And after some time, financial statements will be issued. Is it right? And after some time, there will be AGM. Is that now, if you take that into consideration, what is the subsequent event? Subsequent events lies here. Is that subsequent event lies here? Means what? Now I am going back to the slide. Okay, are you clear about this? This slide is very important to understand everything. Is it? What is the subsequent events? Is nothing but, where is that? Here. Is it? It's nothing but between the date of the financial statements, is it right? Date of the financial statements and date of the what? Auditor's report. What's happening? Facts that become known to auditor after the date of the auditor's report. Is it? Now what happens? Here's the thing. This is what it says. We are talking in terms of, understand, this is what it says. This is the 31st December. This is the auditor's report. This is the financial statement issued, and this is the AGM. See, once you have signed it, then you will come to know that there is something wrong. You have to make some changes. That is the subsequent events. Subsequent events are two types. One is adjustments and one is non-adjusting. In the examination, we have to mention whether it is an adjusting event or it is a non-adjusting event. For this, they will give you marks. Very specifically, very precisely. Is that adjusting event that provide evidence of condition that exist at the year-end date. Before 31st March, is that what are the adjusting? Before 31st December, events that provide evidence of conditions that exist as on 31st December, yes, there is something wrong, something has to be modified, it is there. Those adjustments those events we have to adjust. Non-adjusting events that are indicative. It giving only an indication. Is it? It's not, means here you have a element of doubt. Is it? Here you have the element of doubt. That arises after the event. Is it? After the year-end event. Now, this is where we have to be clear. What are the adjusting events? What are the non-adjusting events? Adjusting events, it's 100% evidence of conditions that exist. Whereas in the non-adjusting events, there is an indication. We have 560 subsequent events. Is it right? If you take International Accounting Standards, IS 10. Fine. Now, they are making very clearly, they are focusing only on this. In the F8, they will not ask you any detail. They only ask you to identify whether it is adjusting event or non-adjusting event. Is it? What is the adjusting event? Settlement of the court case, legal cases. Is it? Means we know, because we know this happens before 31st December. There's some cases going on. Sales of inventory after EAN, providing evidence of NRV. Is it? What we are doing, we will say, see the thing. You are talking in terms of what? You are talking in terms of closing inventory. Closing inventory is known. Is it right? It is, everybody knows that there will be a closing inventory. Now, fraud or error showing the financial statements are incorrect. Something went wrong. Is it right? And because of that, the financial statements are not correct. Its evidence is there. Is it right? These are adjusting events. Now, what are the non-adjusting events? Dividend declared after the year end. Is that is the reason. What we are doing? We are talking in terms of what? We take into terms of proposed dividends. See, is it right? Dividends will declared after. See, dividends, when they will declare the dividends mostly during the AGM. Yeah, they will declare the dividends. Maybe see that they will declare the dividends 31st December. They will auditor's report. Once the auditor's report, after that, maybe they will declare. There is no precondition that you have to declare dividend as on this date. We can declare dividends as per the schedule as well. Fire causing, we don't know any destruction. Fire, is it right? Non-adjusting event. They will mention, if you understand these 2-3 slides, nothing is difficult. Is it right? If any fire causing destructions, it is a non-adjusting event. Announcement of major restructuring is an indication. Announcement is nothing but we are talking about what? We are talking in terms of an indication. Any indications, it is a non-adjusting events. Okay? Make it sure what are the adjusting events and what are the non-adjusting. The moment we are going to do the question paper revision, I will come back to this slide anytime whenever you come across this. Now, what is the between the year end and the date of auditor's report? See, very simple. You have to see that is the year, that is what I am talking about. 31st December, you have auditor's reports, you have financial statement issue. All through the time I will write this. The auditors must obtain evidence of that all events up to the date of auditor's report. Yes.
Yes, sir. Fatma has a question.
Yeah, tell me please.
Mr. The adjusting events always coming before the year end?
Yes, at the year, before the year end, is it right? At the
Okay, so if one of these adjusting events coming after the year end, what we can classify non-adjusting events or?
if it comes after the year end. Yes, fine. If it comes after the year end, is it right? I will write with another marker. Yeah, good question. Is it if it comes after the year, how it will come after the year end? Any events, see, we will make it a cutoff. Is it right? We will make it a cutoff. When we are making it a cutoff, we are making it a cutoff of December 31st December. Is it right? 31st December, definitely, yeah, that is what it says. 31st December, if there is any event happened, is that we will take the evidence. Fine. Some cases, events happen, but we don't have no evidence. Is it right? Events happen, no evidence. Is that? We'll come to this very clearly. Is that? There's no. If there is even no evidence, this is the point where we have to discuss with the management. This is the point where we have to take the return representation. Is that anything happened after 31st December but is related to before 30? You have noticed this after 31st December. This is adjusting events are the events which you are noticing only after 31st December. One thing is very clear, is it? You are noticing after the 31st December only. That is why it says, is that what is the core definition? Core definition is the date of financial statements and the date of auditor's report. Is that? This is the date of financial statements and this is the date of auditor's report. Fine. Now, this is what the subsequent is. And the date of auditor's report and the facts known to the auditor's report after the date. See, very clearly, it will be related to 31st December only, but you came to know after you are signing the report. Is that? You came to know after signing the report. Means whatever the events that happening, this happening will be for 31st, before 31st December only. But you will coming to know about these events here after signing the report. Is that? After signing the report, if you come to know, is that? After signing the report, you know, then you should know whether it should be adjusted or it should not be adjusted. If you have the evidence, if you have the evidence, then only you can adjust. If you don't have the evidence, you cannot adjust. auditors will not take any responsibility. Is that auditors will very clearly says, auditors subject to this condition. Getting my point? Auditors will, if there is no evidence, is that if there is no evidence, auditors will very clearly say subject to this matter. Other things are normal. Subject to this matter, other things are normal. That is very clearly said. Again, I will explain you. What is the subsequent events? From the date of financial statements till the auditor sign. That event come to the notice after signing the report. After signing the report. Fine. Anything related to till 31st December. Now, if that is the case, which one we have to adjust, which one we should not adjust. Even we will not take anything related to the current year, means after 31st December we will not take 100% any events. The events related to before 31st December only we will take. That is your question. Is it right? Now, if you have the evidence, we will make adjustments. If you don't have the evidence, we say subject to this matter, other things are fair. Definitely. Now you will say no evidence. Sometimes what will happen is that, be very clear, is that sometimes you will have some element of doubt in non-current assets. Sometimes you will have element on doubt only on property. We are not saying a complete financial statement, is it right? Only on property. Sometimes we'll say only on inventory. Sometimes we'll say only with respect to receivables. You have a doubt. You are asking management. Management is not giving any response to that. Then you will say that subject to the receivables, the financial statement is reasonable. Subject to inventory, subject to property. Are you okay with this?
Yes, clear.
Is it? Fine. Okay. Now, I will come back to this when we are doing further more. I keep it in mind and I get back to you in more detail. Okay. Now, what it says, these are the things. What is now? What is the evidence? How we have to collect the evidence? That's very important. Okay. Between the year end and the date of audit, the auditor must obtain sufficient appropriate audit evidence, all events up to the date of auditor's report. Is it right? That requires any adjustments or any disclosures. How you will obtain evidence? Is that you obtain evidence simply with inquiries to the management. You will have this. They will not ask. Okay, you have to this. They will not ask you anything. They will not find anything in the question paper on this. Okay, this is only a theoretical concepts. Okay, what you will do? Definitely all through the time. What we are doing? We are reviewing the board meetings minutes. Is it right? You should. What you are doing as an auditor, you have to inquire with the management. You have to review the board meetings. You have to review the audit procedures. Is it? You have to have a opinion of the lawyers, and in the end, you should have written representation. This you have to. If you are clear on this we have to mention in our answer, and this we are doing repeatedly all through the time in the previous lectures. We have to inquire with the management with respect to the specific thing. Assume inventory has been lost and fire. We have to inquire with the management that the sufficient insurance has been done to the inventory. We have to inquire with the management whether evaluation has been done. We have to inquire we have to review the minutes of the board minutes, that it has been discussed and it has been written off. Is that? we have to inquire if there is any litigations. We have to take the opinion of the lawyers that it is a reasonable that we have to pay or we have to receive. We are not, most of the cases we are not receiving, we will pay litigations. Is there any legal cases? Is there any legal cases? Because auditors are not specialists, they are not experts. We have done this in the lecture 7. We have to take the opinion of the experts. Yeah, we have to take the opinion of the experts. In that case, we take the support of what? Legal experts. And last but not the least, it is written representation from the management that has to be taken into consideration. These 5 points, okay? These 5 points will be there in our answer. Now, between the date of, or now what happens is the thing. We are not talking about, this is 31st December and this is what, this is auditor will sign. Is it? Now, somewhere we are issuing what? Financial statements are issued. What is the responsibility of the auditor? That's what it says. What is the? No obligation to perform procedure. The auditor is not responsible for this. Is it? Anything happened here. But it became aware that it have caused amendment to auditor's report. You have to make any changes. Auditors are not having any obligation. They will sign, done for the day. If it has any amendment to the auditor's report, not the financial statements, and if it is known at the date of auditor's report, on the date, means at the time of signing, means till now the auditor will have the control. Understand? This is where it says, till now auditor is having the control over this. Is it? No obligation to perform any further procedures. We will do procedures as per the thing. But at the time of signing the report, is it right? If you come across anything, still you have control over, you are not signed, okay? Discuss with the management first whether it is needed. Determine whether financial statements should be amended, any adjustments should be done. Because still auditors have not signed. Very sensitive, very critical. Once you have signed, it is done. If amendment is required, discuss with the management how they intend to address the matter. Again, very important points. Firstly, as simple as that. No obligation to perform procedures, but if it becomes aware of the fact that you see, once, see, till it is not your knowledge, don't do anything. You are not responsible. But once it comes to your knowledge, understand what? As an auditor, if it comes to your knowledge, fine, you cannot ignore it. Understand what? That is the most crucial one. Is it right? You have not signed it. It comes to your knowledge. You cannot ignore it. Immediately, you have to discuss with the management. You have to know whether financial statements need any changes because of this. And if it needs changes, how we are going to address it, how we are going to change it. Because still it is not signed. Between the date of auditor's reports and the issue of financial statements. Still we have not issued what? Still we have not issued financial statements. Still we have not issued financial statements. That's the most important thing. The moment you issue financial statements, it will become public. Is it? It will become public. Now, when we do the question here, you have to write write on your own. 31st December, auditor at the time of signing, financial statement issued. That's all. We are not talking about AGM, all those things. Is it right? What happens? If amendment is required, what is the condition? Subject to the conditions. Is it right? If the amendment is required, necessarily you have to do some audit procedures. We are not doing the procedure just for the sake of doing. Is it right? We have to do. See, we have to write, that's all. Okay, we are not going to do any technically, we are not going to any in-depth investigation in this. Perform necessary audit procedures. Is it? No. Extend audit procedures. Is that what you are doing? Is it? Extend means what happening? You are increasing what? You are increasing the sample size. Yeah, you are increasing the sample size. You have done audit, you assume as very clearly. Is it right? It's very, very specific. Is it right? You have done something with respect to inventory. Is it right? Now, inventory, there is some, only inventory, okay? We are not talking about, other things are all same, inventory. Now, there is some material misstatement. Is it right? There is some material misstatement in the inventory. What you will do? You have taken inventory last 15 days. Is it? You have done the procedure, inspection, observations, is it right? Rights and obligations, everything you have done. Now you find material misstatements. What you will do? You extend audit procedures. You will not do for 15 days. You will do it for how many days? You will extend it for only for inventory. You will extend for 30 days to know whether this problem, this issue is only for 15 days or for 30 days. That's all. You will not go beyond it. That is the reason they say very clearly, extend audit procedures. Is that? Now, and what we are doing? We are giving a date for new audit report because it has not been issued. Is it right? It has not been issued. We will extend the date of auditor report and we will extend the procedures also. And once it's done, you are going to provide new audit report. Now you will ask, what is the issue? Issue is only to the inventory. Other things are remain fine, true and fair. Issue is remaining only to the inventory. Issue relating to a particular element, as simple as that. Issue related to receivables. Then you will extend the receivables procedures. Is that right? It is fine. In that case, what you have to do? Management make the amendment. When you are making the amendment, you have to increase the audit procedure, perform necessary audit procedures. Is it right? You have to extend the procedures and extend the date, fine, and you have to provide the new audit report. Fine. Now, sometimes management do not make the amendments. Is it right? Management says that you have to modify the opinion. If auditor's reports not yet provided, is it? You have to modify the opinion. Is it? Definitely the opinion will change. Just imagine. Is it? If management do not make any amendments, definitely you have to subject to the matter. We are not talking about the complete financial statements. Is it? Subject to the matter. We have to write this word. For this word they will give you marks. Notify management to those charged not to issue the financial statements if auditor's report already provided. Notify, just take precautions. Is it? That not to issue financial statements. Hold it for a while. Is it? Modify the opinion. Is it? If auditors have not provided, Then provide the auditor's report. Notify to the management that don't issue the financial statement now. If financial statements issued, is it? If means we are taking all three different scenarios. The scenario is if the auditors have not yet provided, is it? Then you make changes to the audit report. If it has been notified to the management not to issue the financial statements, fine, hold it forever. If financial statement issued, take action to prevent reliance on the audit report. Means if financial statements have been issued, is that nothing is there, it's gone from the hands of the auditors, is it right? Again, you have to make very clearly that this concept has to be stressed, that financial statements are fine, true and fair, again to the subject matter. This is where you are giving an opinion. This is where we are giving the opinion to the stakeholders. Is that you should, if even a small element of doubt is there, you have to be very specific. If management is making amendment, fine. If management is not making amendment, then there is a issue. If management is making amendment, perform procedures, extend the procedures and issue a new report. Nothing is there. Almost it is done. The question they will test. The question they will test is when the management is not going to give response. Then sometimes the management will not give written representation also. Then in that case you have to modify the report. When you are modifying the report, you cannot modify the report in totality. You have to modify the report to the element which point is subject to discussion. That point only you have to highlight. Other things we should not do. See that another scenario, is it right? Facts discovered after financial statements have been issued. It happens, it is right? See the thing, they are talking about the thing. First they are talking in terms of 31st December. Then they say that yes, auditor have been signed, is it right? Then they say that yes, now financial statements has been issued. What will happen here? What will happen here? Is it right? Once you have issued the financial statement, no performance to perform procedures. But if it became a same thing, is it? Auditors will have very conditionally work they will do. Is it right? Conditionally work they do. They say that if it is after the financial statements has been issued, again the same procedure, discuss with the management, determine whether financial statements are needed, amendments. If there is any amendments, how we are going to address it. Fine. The same way, first you have to discuss and we have to know what are determine whether financial statements are needed to amendment, and if it is needed, how we have to progress it. If amendments is required, after make it a point. This is that if amendment is required after financial statement is issued. These tables are these tables are little bit thinking tables. Okay, if after financial statements has been issued, See, you can see the rule says that if there is anything that happens, we can make it subject from the year to year. But in general cases, we cannot change, modify the financial statements or audit reports after it has been signed, but subsequent disclosure we can make. Subsequent happens. 2020 happens, now you have disclosed that. You cannot go back and change 2020 financial statement. But now you can make general entries, you can make provisions, and you can redraft the things subject to the adjustments which is related to 2020. Because we have issued the final. What they say, again, you have to perform procedures. See, when management is agreed now, concept difficulty is less. You are performing the procedures, review procedures that anyone in receipt of previously issued financial statements is informed. Is that review procedure to ensure that anyone in receipt of the previous financial statements, is that means again what you are doing, we are making a conditional presentation. Okay, issue a new audit report. Get my point? Issued a new audit report. This word you have to be very clear, with explanatory paragraph. Is it with explanatory paragraph? Fine, mistakes will happen. There's no doubt on that. Okay, management is agreed. Management is accepting. Okay, we will do the necessary audit procedures. We will say that if it has been issued previously, definitely we will inform them. And once it has been informed, we will issue a new audit report. With what? With explanatory paragraph. That's additional paragraph. Is that additional paragraph? They will write very clearly, explanatory paragraph. This word, I am telling you very clearly, this word carry marks. This word is carrying the marks in the examination. As simple as that. Is that extend audit procedures to date till the of new auditor's report. Definitely, it will take time. Is it right? You are doing the further audit procedures. It will take time, and you extend the audit procedures till the new audit report has been done. Here the issues are very, very simple. The complication, the rules is here. Notify management that those charged with count that the auditor will seek to prevent. Is it? Notify and those charged that the auditor will seek to prevent reliance on the auditor report. Auditors will say that no, auditors have signed, but auditors will say that they will notify to the management that we are not going to prevent future reliance. In future, definitely the audit report that has been issued, understand point? The audit report that has been issued, that audit report we are not going to rely on that report. If still no progress, take action to prevent reliance. Means the auditor will say we are not responsible. Is it? We are not responsible. Means first you notify it, and they will say that in future we are not going to do anything. Is it? And if still there is no response from the management do not want to make any amendments. Is it? The responsibility of the auditor is nil. It is the responsibility of the management. The issues, the question they will ask is, they will not ask when the management will make the amendment. The management when they don't make the amendment. Is that? These three factors. Okay. These three factors we have to mention, we have to take into consideration. Is it? First, the first one is whether it is an adjusting event or non-adjusting event. The second one is from the auditor's reports to the financial statements. Third one, from the financial from fact discovered after the financial statements. Is it? After the fact. In the examination, they will give you three different scenarios. Very clearly. See, you approach technically. When we are doing this, you will find it very specific. One scenario, they will talk about whether it is a adjusting or non-adjusting. Second scenario, they say that it has been from where it has been from auditors have signed. Is it right? Auditors signed but not issued. The third one is auditors signed and the financial statements has been issued. You take any question, take my word, you take any question of any examination, you will have three scenarios, A, B and C. Okay, A, B and C. That much we should be clear about this. Are you clear about this? Is it okay? Three scenarios, adjusting, non-adjusting, after date till auditor signed, and financial statements has been issued. Subsequent testament sequence have been tested in a question with respect to the see the things, 2 or 3 mini scenarios. Is it 2 or 3 mini scenarios? You could be tested on the skills or section A. Fine, it is on April 21 is recommended. Is it right? No. Fine? Yes. What it says. Is it? What it says. The thing is, the audit of Gigs company financial statement for the year ended 31st December has been completed. The audit report and the financial statement has been signed and not issued. Is it right? Means 31st December. Is it 31st December that has been signed, it has been signed and it has been not issued. Is it right? Now, the finance director of Gigs has just informed that the audit team has received notification that the material receivable balance. See, they will put very clearly only one element, okay? They will not cover the thing. Material receivable balance has become irrecoverable. And Gigs will not receive any of the amounts owing. Is that? Any of the amount means we have the evidence. Is it right? We have the evidence that this is going to happen. Is it right? This is going to happen, that they will not receive any of the events. Is that? What actions, if any, should the auditor now take to satisfy the responsibilities? Is it? To satisfy the responsibility. What it says, is it? What it says, see, no actions required. Is it? We will never go with the no actions. Is it right? Action is required, as simple as that. Is it right? Action is required. As simple as that. Is it right? We cannot say that it is no action. Is it? Request management to adjust the financial statements, verify the adjustments and provide a new audit report. Because what they have said here, the audit report has been signed. The audit report and the financial statements has been signed but not issued. Is it? They have signed it. These words you should be very, if it is signed but not issued. Is it right? If it is signed and not issued, definitely what happens, what they are saying, request the management to adjust, as simple as that, verify the adjustment and provide new audit report because it has been signed but not issued. Is it right? It has been signed but not issued. Request management to make disclosures. Is it? To this event. No, we cannot make disclosure. Is it right? We cannot make disclosure. We have to adjust. Request the management to adjust the event in the following year. No, we cannot do in the following financial statements. We cannot do it next year. Is that because it has been signed, not issued. Is it right? Signed but not issued. Is that you cannot, still there is a time. Understand? Still there is a time for us. Is it? Then you have to issue a new audit report. We cannot see these are the things. First and foremost, make sure that what is the core element, keyword in the question. Is that you have to in next few questions, wherever we are covering these points, we focus only on this. We focus only on this, whether they have signed, they have not signed, they have issued, they have not issued. If financial statement issued, the outcome will be different. If financial statements has been signed, audit report has been signed, the outcome will be different. Here they have signed the audit report, but they have not issued the audit report. If they have not issued the audit financial statements, there is a still they can hold it. They can ask the management to make the changes, to adjust the changes. Once they have adjusted changes, they will verify it. Understand? They will verify it. Once they verify it, they will go for a new audit report. Because they gave you this issue is a material adjusting event. It is with receivables. Is it? It is a receivables. Receivables we can ignore it. Is it right? And what it says, see, the finance director of Geeks company has just informed the audit team that he has received notification that the material receivable balance has become irrecoverable and will not receive any amount. Means when you are talking about the amount, it is material. Fine. This is the way we have to identify whether it has been 31st December till auditors have signed. If auditors have not signed, treatment will be different. Auditors sign, treatment will be different. Financial statement issued, things will be different. Is it? We will cover all these three scenarios. Here we will come across the same events. Is it? They are talking about what they say, there are two events, the following two events. Automatically the moment you say following two events, they will be signed and financial statements only. I have not read it, but I am very sure about it. Is it right? First we will see what is the requirement. Is it right? Explain whether the financial statements required amendments. describe the audit procedure that should be performed in order to form a conclusion. Is it right? Now, what they are saying, they are talking about how many marks? 12 marks. I told you in the beginning of this chapter, 12 to 15 marks is dedicated for this. Is it? 12 to 15 marks is dedicated for this. Now, first we will identify what happened. Is it right? First, you see, the manufacturer chemicals has a factory and 4 offsite locations for finished goods. Panda year end is how much? This is very important. 30th April. Okay. The final audit is almost complete and the financial statements and audit report is not signed. It will sign next week. Revenue is how much? 55 million. Profit before tax. The moment they say sales, they say profit before tax. What is the materiality? Here it is 1%, here it is 5%. Automatically it will come to, you have to recollect it. Is it right? We have to compare with 1%. If it is more than 1%, it is material. If it is more than 5%, it is material. Fine. The following 2 events have occurred subsequent to the year end. Is it? The following 2 events have been, no amendments or disclosures have been made. As Fatma has asked just now. Is it? The events have occurred after the year end. Is it right? Now, what are the events? They are defective chemicals. Is it? Panda undertake extensive quality control checks. Is it? After the year end. Okay? After the year end. Prior to dispatch of many chemicals, testing on what? 3rd May. When the year will end on 30th April. Okay? Year will end on 30th April. Testing is done on 3rd of May. And the batch of chemicals produced in April, see the things. What you have asked, the same thing is there. What happened in the April was defective. Is it right? The cost of that batch is how much? 0.85. If in the current condition it can be sold to how much? It can be sold to 1 million. 0.1. The cost of correcting the defects are too significant for Panda's management and to consider this as an alternative option. They say that the cost is how much? 0.85. The scrap value is how much? 0.1. Is that the scrap value is how much? The cost is how much? 0.85. Now, they gave us, they gave us the value of sales and they gave us the value of profit before tax. They gave us the value of sales, they gave us the value of profit before tax. Fine. Now, first we will see how we can approach this one. Is it right? First we will see how we can approach this one. Just 1 minute. I'm just putting that calculations. Okay. I'm just making the calculations, and I'm just. Zero 0.85 is the defective. Okay, is it right? 0.85 is the defective. Okay, cost of this batch is 8.5, and the scrap value is how much? 0.1. Is it? Scrap value is how much? This is the 0.1. It comes to 0.75. Okay, 0.75. Sales is how much? Sales is 55 million. Okay, revenue is how much? Revenue is 55 million. What is the profit before tax? Is it? Profit before tax is how much? Profit before tax is 5.6 million. 55 million, 5.6 million. Okay, 55 million profit before tax is 5.6 million. Fine. Now, is it right? Now, is it? How much is the amount? 7. See, they have. This is the scrap value. Is it right? This is the loss. Is it right? This is the loss. Fine. What is the revenue? What is the concept of revenue? If revenue is, it should not be more than 1%. Is it right? It should, if you compare with revenue, yes, 1%. Fine. Now, what is the loss? Loss divided by revenue into 100. Loss is how much? 0.75. Revenue is how much? 55 million into 100. It comes to how much? 13.63. Is it right? 75.75 divided by 55. 13.63. Is it right? Fine. Next. Loss is how much? Loss divided by profit before tax, PBT. Okay. We have to do like this into 100. Loss is how much? Loss is 0. No, loss is how much? Yeah, fine. Okay. Now, loss is how much? Loss is 0.75 divided. Profit is how much? 5.6 into 100. How much you'll get? 0.75 divided by 55 into 100. Is it right? Sorry. Here how much? Do calculation. Check calculations.
1.3.
How much?
1.36.
Here it is how much? Here it is 1.36. Okay. Here it is 1.36.
Mr. 1.36 for 0.7 divided by 5.6.
No. Check 0.75 divided by 55. How much? 0.75 divided by 55 into 100. 1.36.
Yes.
Is it right? Next.
Yes.
Is it right? Here it comes how much? 0.75 divided by 5.6.
13.
Times 100. 13.4.
Yes.
13.4. Is it right? This one we have to do. Is it? Now you can understand. If it is more than 1%, it is material. If it is more than 5%, profit before tax condition is 5%. Is it right? Profit before tax condition is how much? 5%. If it is more than 5%, it is material. If it is more than 1%, it is material. How you are determining the materiality? Based on the calculations. Fine. Now, that much we have, see, this much you have to write. You will ask me how we have to present. First, you have to do calculations. Understand? You have to do calculations. And subsequently, based on the calculations, in simple words, you have to write. Is it? In simple words, you have to write. 1 minute. Okay? Now, 1 minute. Okay, fine. This is where it says. Is that? Means you have 85 million is the cost. 1.1 is the scrap value. Is it right? See, cost is how much? Cost is 0.85 minus scrap is how much? Scrap is 0.10. Loss is how much? Loss is 0.75. This is the loss to the revenue. Is it right? Loss to the profit before tax. As simple as that. Nothing more, nothing less. That's the very simple way of putting the things. Okay? Now, what it says, a batch, just writing in your own words, is right? Don't write 1 or 2 sentences. A batch of chemicals produced before the year end is how much? 0.85. They have found it defective. Its scrap value is how much? 0.1. Inventory should be valued. This we have to write. Is it right? This is the condition. Inventory should be valued at the lower cost or net realizable value as per IAS 2. This is very important. These things will add really weightage to your response. This is an adjusting event. Why this is adjusting event? This is because it is more than 1%. It is more than 5%. Is that? It is an adjusting event. It is more than after the reporting date. As it stands, the inventory is overstated by 75.75. This you have to write. Is it? Now you can say it is not difficult. There are 3 things. First one, you are talking about the general. Second one, you are talking about the inventory. Okay. Third one, you have to mention very clearly, this is a adjusting event. This is that because it is more than 1% of revenue and 5% of the profit before tax. And therefore material to the financial statements. Are you clear about this? Is it clear? Is it how we have approached the question is very important. Is it how we have approached the question is very, very important. Now what we are doing is that what we have done, we have made it a point. Is that what is the procedures you have to do? We have to do what is the procedure? The first procedure is obtain the schedule. You have to obtain the schedule. Is it right? To confirm that the value of defective is 8.5 and the scrap value of 0.1. You have to discuss with the management whether this is the only defective item or there are other items also. Discuss with the management whether this is only one off item or there are so many items are there. Review the quality means you are not talking about only the management. We are taking the opinion of the experts to assess that likelihood of other batches also, because we have to make sure that it is only to this batch there is a defective item, other batches are normal. Is it? What is the procedures? Obtain the schedule of the cost and the scrap value. Discuss with the management whether this is the only defective batch. Not only we are not relying only on the management. Discuss with the quality control experts that this is the only batch, or there are other batches also which have been tested as a defective items. Okay. Now, when they say 12 marks, 3 marks for this, is it right? See the thing, you should be very clear about this. Is it? 3 marks is for this. Is it? And 3 marks will be for this. Okay. Now, very easy to score marks. I am saying very simple way. The more we do practice questions, the more clarity will be there in your minds. Second one, okay, there are 12 marks available, in total 6 for each event. That's what they say. You are provided with revenue and profit before tax. You must use them. Assessing whether you have to use calculations, that's what it says, to know the materiality. The first thing you have to consider is whether it is an adjusting event or it is not adjusting event. If it is more than the performance, it is more than the percentage, it is an adjusting event. If it is less than the percentage, it is a non-adjusting event. Is that? Then look at whether it is material or not, and then you have to think about the audit procedures. Second one. Is that, say now first question little bit thinking, is right, it take time. The explosion occurred at the smallest of the 4 locations on May 30. When we are preparing 31st April 2003. The resulting in damage is that it happens after the year end. Understand point? It happens after the year end. This resulted in some damage to inventory and property, plant and equipment. Panda's management have investigated the cost of explosion and believe that they are unlikely to able to claim on their insurance. Means we will not have any insurance. Management of Panda has estimated that value of the damaged inventory and property is how much? 0.9, and now it has no scrap value. Is it right? They estimate the damaged inventory, value of the damaged inventory and property is how much? 9 million. Is it right? 0.9. And they have no scrap value. What is the same thing? Is that sales is how much? 55 million. Profit before tax is how much? 5.6 million. Fine. Now, first you make a calculations on that. That's very important. Is it right? You make a calculations on that. How much is there? You do on your own. Calculator is important. Okay. Don't forget to take. It's not a theory subject. Okay. How much is there? 0.9. There is no 0.9 divided by 55 times 1.63. Loss divided by sales into 100. 1.63, more than 1%. Okay? 0.9 divided by 55 into 100. 0.9 divided by 5.6 million. Okay? Times 100. It comes to
16.1.
16.1. You have to divide into three different statements. This is one statement. Is that? This is one statement. The second one is what? The second one is, first you have to mention in general the amount on inventory. Damage is 0.9. It has no scrap value. Inventory and property, plant, equipment. Therefore, overstated by how much? 9. Means definitely, if you are not doing any adjustments, it has to be reduced. If you are not reducing it, it means you are overstating. Second point. Is it right? Second point. What they say? This represents 16.1% of PPT and 1.6% of revenue, and therefore it is material. Is it? Very, very, you have to mention this, whether it is material or it is not material. You have to calculate. Is it? You have to calculate. Fine. The explosion represents a non-adjusting event. Is it? Because it happens after the reporting date. It happens when? It happens in May. Is it right? It happens somewhere in May. And it has happened, it means it is not related to the previous financial statement. It does not require adjustment. But it has to be disclosed. Technically, this is that. Now, see, unless and what happens, go to the one. Is it right? The where it has been given here. It happens when it happens on 20th of May. Is it right? It happens on 20th of May. Now, what happens? The final audit report is complete and the financial statements and audit report is due to sign next week. Is it? It has not been signed. Is it right? It is due to sign next week. Now, because it happens, the event happens after 30th April, it happens on 20th May, it is not related to current financial year, it relates to the one which you are going to be audited. Is it? That is the reason. That is the means next year it will be an adjusting event, but this year it is not a adjusting event. Dates are very, very important. Okay, date is very, very important. If it happens before the end of the financial year, take it. If it happens after the end of the financial year, it is not a adjusting event. But it has to be disclosed in the financial statement because we have not signed it. Why we have to disclose? Because it is having a material aspect. What is the audit procedure we will do? Is it? Obtain the schedule. Is it? Obtain the schedule. Schedule is nothing but the details of inventory, property and equipment worth of how much? 9 million. Fine, it has been explosion, a huge loss. You visit, inspect the site, visit the site, and you personally assess, is it? Discuss with the directors. The need to make disclosure in the financial statements and review any draft. Means it has to be disclosed. It is why it has to be disclosed in the financial statement. Because why we are doing this? Keep it in mind. It is the inventory. Is it right? This is the inventory. We are showing as a closing inventory. Is it right? Next year, when you are talking in terms of opening inventory, is it right? When you are talking in terms of opening inventory, because it happens on 20th May, it will have its effect. Is right? It will, because closing inventory, opening inventory is fine. But why you have to disclose? When you know the situation, when it happens before you, inform them. Is it right? It happens before you inform that. Yes, because still we have not signed the audit report. Inspect any insurance agreements. Definitely, it is a loss, is it right? See, every asset, every inventory, every type of asset or every type of inventory will have insurance, compulsory insurance. Is it right? Because it is a loss, you have to inspect insurance agreements and is there any claim to the two things we have learned. Is it right? Two things. One is we have learned about the concept of percentage, performance materiality. Is it right? Second thing we have done with the if the event happened after that date, we should not do any adjustments, but it has to be disclosed. If you understand this, almost you are having 12 marks in your hands. Very simple. Is right? Second one. Any doubts, stop me. Understand, boy? Any doubt, stop me. If any doubt is there, I will definitely I will give some more. I try to my best to give some more further clarifications. Going concern. Is it right? We'll complete this and stop. Okay. Going concern. Second part. Okay. Completely. When we prepare, what is the rule we are doing? Always make it point. It's a opening balances. It's a opening balances and it is a closing balances. Is it right? This is the part of the system as such. Why we are saying closing balances? Because next year it will be we are going to continue. Okay. Financial statements should be prepared on a going concern basis unless management intends to sell it off, to liquidate, wind up the in business, or there is no. Is it right? There is no realistic alternative. Fine. It is a going concern. Is a going concern. You see, that's the reason. Is that what we are saying whenever you are talking about the profit and loss account? Is that for the year ending? Is that for the year ending? Is it? Always there is a opening balances, there is a closing. This is the best example for a going concern. Going concern means the entity is viewed continuing the business in the future, foreseeable future. If the going concern basis is not appropriate, the financial statements must be prepared on a breakup. If we think that yes, going concern is not appropriate, we have to make it a breakup. Is that breakup means whether we will continue or we will not continue. Definitely we will go with the intention that we will not continue. We are not doing any calculations here. Understand? But no calculations is only in the subsequent events. Okay? There is no calculations here. Is that? It's a going concern. But make it a point. Make it a point. Whenever I will, from the next class onwards, I will update the list on the group and I will ask you the standards. Is it right? Very clearly. I will keep the standards in front of me and I will ask you. Is it right? 570 is a going concern. You remember this, you memorize this. You remember this, you memorize this. The moment you come across going concern, write somewhere I am telling you, We are not initially, somewhere means in the beginning, straightforward write ISA 1570. Is it right? Whenever we are talking about the standards, first paragraph, first 2-3 lines, write the ISA. Is it? Now, what it says, see the thing. What are the indicators? Why we assume and presume that the company will not run next year? Is it right? You will have negative operating cash flows. You will have a substantial sales of people will sell non-current assets. It's a going concern issue. Inability to pay to the creditors. Is it right? You are discontinued paying dividends. You have losses continuously. You have changed from credit to cash. Very, very simple. Is it right? Nobody will give you credit if we are finding it difficult to pay. We have to pay on cash. Is it right? You have your financial ratios are very, very adverse. Current ratio will be less than 2:1. You should be clearly have this in your mind. Make it a point. Current ratio, liquid ratio, the importance of receivables, credit, payables, inventory. Is it right? A good command over ratio analysis. Borrowing facilities not agreed. Nobody will pay us loans, give us loans. Your liabilities are increasing. Is it right? Your liabilities are increasing. These are the issues with respect to the going concern. We will never talk about positivity. We always see very simple. Going concern talks about negativity only. Fine. Now, what are the operating what are the from the management point of view? Definitely management intention. Management decides that this is qualitative. Is it right? This is qualitative, and whereas this is quantitative. This is qualitative. Now, what are the qualitatives? Fine. You will have labor difficulties. You will not find labor. Is that people to work? Your competitors are more skilled, more successful than us. Is that our competitors launching the product? Definitely. Shortage of inputs. Is it a shortage of important supplies? Is that means we are not getting supplies as such? See what happened in COVID. Same thing happened. Very simple. Is a going concern. So many businesses has been closed. So many businesses has been closed because once it is closed, it is very difficult to recover also. Isn't it? Excessive dependence on the few product lines. Means we are not having more space, more width to have products. Loss of major market, key customers, license or suppliers. Is it right? And loss of key staff without replacement. I don't know how many of you are following the concept Twitter nowadays. Is it right? How many of you following Twitter nowadays? Is it right? See, if you take that into consideration, Twitter, is it? I am not saying what happens. We cannot judge what happens tomorrow, day after tomorrow, next year. But if something goes wrong, remember what I am saying today. Twitter is going through a very difficult phase. It is a going concern problem. Whether it exists or it not exist, nobody knows. Because what's happening, keep it in mind. They are losing the key staff. Is that they are removing the staff as such. Definitely, when you remove the staff, nobody is there to deliver the product. And it is very specialized industry. It is not a general firm as such. Specialized technology dependence. And you are removing the staff. New people will come. Very difficult to establish. That is an indication of a going concern. Fine. What it says, other indicators. Is that you have uninsured catastrophes. Is that catastrophe? Means something happened, COVID, going concern problems. Is that something change of legislations? Is that change of rules and regulations? definitely it will be very difficult to work out. Pending if there are any legal cases, huge legal cases, is it? It's a going concern problem. Non-compliance with the regulations, it is a going concern problem. Is it right? It's a going concern problem. Understand this. The moment you understand the concept, the questions will be very easy for us. Okay? Focus. Now, what is the management responsibility and what is the auditor's responsibility? Is it? Management response. What is that? Management responsibility is to continue as a going concern which should cover 12 months. We have to make sure that we are having a good plan and strategy for the next 12 months. Next 12 months, next financial year, we are going to survive. That is the management responsibility. What is the auditor's responsibility? You have to get as simple as that. This is auditor responsibility. Every case, you have to get sufficient appropriate audit evidence. That the assumptions are, management assumptions are fine. You have to know to conclude whether material uncertainties they exist or not. Yeah, there is any significant doubt on ability to continue as a going concern. Is there any doubt is there? What are the doubts? Doubts with respect to these indicators. Okay, these are the indicators: financial indicators, operating indicators, other indicators. Okay, in the situation, in the question, they will give you very openly, very simple, very openly. You can understand the moment you will read the scenario, you will understand. Answer is there in the scenario only. Okay, answer will be there in the scenario only. Fine. Now, to determine the if things will not go fine, there will be implications on the auditor report. Okay. Now, what is the procedures you have to adopt? Is it right? What is the procedures? They have mentioned almost how many there. See the things. I will write numbers. 1, 2, 3, 4, 5, 6. Is it? 7, 7, 8, 9, 10, 11. Is it? 7, 8, 9, 10, 11 and 12. We are not going to write all this. Understand point? Very simple. In the beginning I am saying you decide which one are easiest one. I will tell you and you can do on your own also. Is it right? First and foremost, analyze and discuss cash flow, profit and other forecast with the management. This is the reason why we prepare cash flow statement. Cash flow statement is prepared only to make sure that how the future of the company will be there with respect to going concern. Next, okay, analyze now you fix, you identify, I am very clearly saying, you identify any six and you just fix on those 6, as simple as that. Okay, make it 6 points, whichever you find it easy, and stick to that 6 points. Is that they will not ask more than 5, more 4 to 5 they will ask, that's all. Analyze and discuss latest interim financial statements. Definitely, when you are talking about the cash flow statements, when you are talking in terms of forecast, it is nothing but we are talking in terms of what? We are talking in terms of management accounting. Most importantly, where the problem will work. Is it right? Where the problem will work. Terms and agreements of what? Terms and agreements of loan agreements. Is that something goes wrong, bank will not give loans. Something goes wrong, bank will stop the loans in between. Understand what? Something goes wrong. If you are not, the bank, what happens usually, bank will assure that they will give you 5 million loan. But what happens later, after some time, they will not give loan. Or another one, you have applied for loan. Is that you have applied for loan? Is that you have applied for loan of 5 million, but still no approval. Still no approval. Fine, it's a going concern problem. Is it right? It's a good. And whether there have been any breach. Now, what it says, read the minutes of the meetings of shareholders. Board of directors meetings are very, very common point to mention. Review the board meetings minutes. A common standard point you can write in most of the cases. One point you remember, you can use this point in commonly in across any cases relevantly. Review the minutes of the meetings of the shareholders of board of directors, important committee, and is there any financial difficulties. You can have lawyer's opinion, any litigations or claims are there. Because if any claims are there, immediately you have to pay. Is it right? If you are losing any case, legal case, you have to pay. Is it right? The client has to pay. In that case, you have to review. Is there any legal cases are there against a company? Because of that, in future, if the company is losing the case, definitely the company has to pay a hefty amount. Is it right? For that, you have to inquire with the entity's lawyer. Is it right? Confirm the existence, legality and enforcement of what? To arrangements for what? Provide and maintenance financial support with third parties. When we say third parties, banks, is it right? Suppliers, is it right? Banks and suppliers. Financial support, that's what it says. See, suppliers, credit, is it right? If we are working effectively, people will give us credit. If I am in financial difficulty, people will not give me credit. Is it right? Confirm the existence, arrangements, okay? More than that, see, you take the easy words. Confirm the existence, legality and of the arrangements. To provide what? To provide or maintain financial support. Related third parties, banks, suppliers, lenders, is it right? Who will support us with respect to the credit as such. Is it? What is the financial ability of such properties to provide additional funds? See, if the things will go fine, people will give credit, okay? Additional credit. Take into consideration loan from the bank. Is that loan from the bank? People will take. They will take for the capital expenditure. They will take. Is it right? People will take the loan from the projects, they will take loan. People will take loan for the working capital. See, if the business is going on fine and you are paying on time to the bank will give loans, don't doubt on that. Is it right? Bank will give every type of loan. Overdraft also they will give. Is that? We have to know whether support sufficient, backup support assurance is there that if we need money, we can get it from the bank. Consider the entity position with respect to what? Unfulfilled orders. See what happens. This is the concern. If things will not go well, is it right? You cannot complete the orders. Completing or delivering the orders will be a question mark. You cannot fulfill the commitment. Is that very simple? You cannot, is that cannot fulfill the commitment. If you cannot do the things, definitely it is a going concern. Review the events after the period end. Is it? Review means after 31st December till you are signing the financial reports. Is it audit report? Is there anything is there? It come to your notice, disclose it. Is it? If you come to a notice, if you have not signed, change. If you have signed, disclose. Understand point? Now I am saying, if you have not signed, is it right? You have to make amendments. If you have signed, is it right? If you have signed, if there is an option, you have to reissue. Is it right? You have to go for a new audit report. Is it? You have to go for a new audit report. Or if there is something event after the year end, is it? After the year end, what you have to do? You have to disclose it. Is it right? Now, confirm the existence with respect. See, all the time they are talking about what? Borrowing facilities. Whether we are getting enough. See, that is what they say. 99% of the business, any business, runs on the borrowings only. Obtain and review reports from the any regulatory actions are there. If there any changes has been happened in the rules and regulations, and discuss the advocacy and support of the planned if people are selling, see, when I'm not saying you, when people will sell the assets, when they have a financial crunch, is it? When they have the financial crunch, definitely fixed assets, exclusively, you can understand, you can imagine, you can observe. If somebody is having a financial crunch, he will sell the assets. Is it right? Selling the asset is a negative sign. Is that? Selling the asset is a negative sign. Is that? Now, I will complete this 1 or 2 slides and I'll stop. The auditor work of going concern is very important. There is a significant impact on the audit report. Is it right? Yeah, we are looking fine. The next slide provide the summary table how it is going to be affected issues related to the going concern. Is it right? I will complete this and I will stop here. Okay? I'll complete this and I'll stop here. Because tomorrow when we'll come back, we'll start with this question. Okay? With this question. Fine? Now, what is the scenario and what is the impact? Now it's very clear what are the financial indicators, what are the other indicators, and what are the management indicators. 3 indicators are there: financial, management, and other indicators. Revise those 3 slides. Almost you are done with the concepts. Okay? Going concern concept, assumption appropriate. Going concern assumption appropriate, but there is a material uncertainty. Assumptions are appropriate. We assume that the company will go forward. Senior, is that? But what happened? There is some material uncertainty. Material is immediately we are talking in terms of amount, in terms of the cash inflows, in terms of loans, in terms of any additional borrowings. Is it right? In terms of recoveries, in terms of any legal cases. Is it right? The things are fine. We say that we will win the case, but ultimately the company will lose the case. Is that? Unmodified opinion with explanatory emphasis of matter paragraph. Unmodified opinion. Don't change any opinion. Okay? Unmodified opinion. Is it right? Don't change anything. Is it right? But don't change opinion. But what you have to give? You have to emphasize on the matter. Going concern assumption is appropriate, right? But there is some material uncertainty. Is it right? What is that you have to mention? Fine, that's very important. Going concern assumptions are appropriate, but which is not adequately disclosed. We have not supporting. Immediately you have to modify the report. Modified opinion is what? It is a qualified opinion or it is an adverse opinion. When we are giving this, when it is adequately not disclosed. Is that? If it is not, see, disclose it. The most important thing is disclose what is right, what is wrong, you disclose it. Nothing will happen. But if you are hiding the things, auditor notice will be there, auditor will come to that point, then immediately he will not take any responsibility. He will give a qualified means subjective opinion, or he will give negative opinion. So use of going concern assumptions are inappropriate. Assumptions is also wrong. Assumptions assumptions are wrong. Definitely which type of report you will give? Adverse opinion. Management unwilling to make anything to make any assessments or extend any assessments. What you will do? You disclaimer of the opinion. You give qualified opinion, fine. Qualified opinion means very specific. Or you don't take any responsibility. Is that? Means what is the message we are understanding from this? Remember this, tomorrow I am going to continue with this. If it is assumptions are correct and it has been disclosed, don't change opinion but emphasis on paragraph. If assumptions are correct, it has not been disclosed, give modified opinion. The qualified opinion means there is some doubt. If the assumptions are wrong, give adverse opinion. If management is not extending any response, give disclaimer. Is it right? Now, these 4 points, one of the 4 points you have to mention in our answer very specifically, whether it is emphasis on matter, whether it is a qualified opinion, whether it is an adverse opinion, or it is a disclaimer. If it is assumptions are right and disclosed, emphasis on matter. If assumptions are right, not disclosed, qualified opinion. If assumptions are wrong, adverse opinion. If management is not willing, it is a disclaimer. In the question, they will give these points very clearly. They will give these points very clearly. Just you have to judge, you have to write.